Bloomberg has here. John, you mentioned UK rates. Can we talk about German 2-year? I think Germany's like flat on its back is a fancy way of putting it.
Recession.
From 0% negative interest rates January of last year. They pop up, they get to March, and now they're right up ready to break through the new March highs. And that's in Germany, flat on their back.
Let's get to Emily Rowland, Co-Chief Investment Strategist at John Hancock Investment Management. Emily, wonderful to hear from you, as always. Tom and I were just talking about it. You've got some people on Wall Street forecasting recession, other people saying things are set to improve. Where are you and the team?
Yeah, this is a very, very tricky late cycle environment where things often look pretty great right before they're not. And you had the great Ed Hyman on yesterday, talking about this, how this late cycle environment's lasting a long time. And we would define that as a period in between when the leading economic indicators go negative and through the recession. And that typically only lasts about 6 months, but we're on month 10, 11. And in the 06, 07 example, we went to 18 months there. So these are periods where you're seeing a lot of chop in the economic data, a lot of chop in yields. You want to participate in the market because risk assets can see these big swings higher. But you guys were talking about I think it was the European Grand Prix earlier on the show, and it got me thinking about how you want to participate in this market. And it's sort of like drafting in car racing. You don't necessarily want to be out front here, taking on too much risk. You want to participate by owning things like higher quality assets and leading into bonds.
I mean, I look, Emily, at where we are in the zeitgeist, just buy quality, buy persistent free cash flow. I get all that. I just want to know, do I want to be in the market or not, given the way my head's spinning with the data? Are you participating in equities?
Yeah, you definitely want to be there right now. As I said before, you can see these massive swings higher in risk assets. As you almost see investors celebrating, as John mentioned earlier, this idea that the economic data have come in a lot better than expected in many cases. So you also want to think about this kind of almost pivot party that's going on right now as investors celebrate the idea that the Fed is getting to the end of its tightening cycle. We've only got one more rate hike priced in, then a hold, then cuts in 2024. So the pivot party can be a pretty powerful one. You want to go to it, but you might want to think about, sipping on a light beer instead of reaching for the tequila, because you might have, sort of fewer regrets the next day.
That's CFA level 4, John, there.
Have you ever reached for the light beer instead of the tequila?
Light beer. John, I was weaned on Coors. You and young Roland don't know what Coors 3-2 beer is. The only one that knows that we talked to is David Malpass.
Talk to me about Coors 3-2 beer.
David Malpass had a keg of Coors 3-2 beer in his room at Colorado College years ago. It was some moralistic Midwest evangelical thing. I don't know and this is all before light beer. And so you were too young. You were getting shot in Vietnam, but you were too young to have a Bud. So you had a Coors 3-2 beer, which is, think of it like a Coors Light.
Right.
Put a glass of water in it. And that's
even
Coors
worse than a Coors Light.
Oh yeah.
Worse than that.
Malpass had a keg of Coors 3-2 beer in his room at Colorado. That's how he got through physics.
How do you think Bud sales did over the July 4th holiday?
Actually, it's a really reportable issue. It's maybe not what we do early morning, but I think in terms of marketing and advertising, the debacle at Bud Light really needs to be studied by every institution.
Look what you started, Emily. Let's move on from that.
Guys.
Talk to me about stocks that you do like, sectors you do like right now, and sectors you want to avoid.
Yeah, so we continue to lean into quality. That's companies with great balance sheets, lots of cash, a limited need to tap the capital markets in order to grow. That does lead us to the technology sector. It leads us to the U.S., which, of course, has an abundance of technology stocks compared to the rest of the world. So, we do recognize that tech, of course, has run a lot. We've started to see that market leadership broaden. We're worried about valuation risk as well. So we want to look to parts of the market that can help protect portfolios from that. Mid-cap stocks in the U.S., mid-cap value in particular, one of the only areas that's trading at a discount, not only to its own large cap peers, but also to its own history. That's another area that we're looking at in portfolios to diversify. And again, leaning into bonds, you're getting 5%. On high quality bonds right now, investment grade corporate bonds up in the credit spectrum. That's another place we think that there's a great mix between risk and return.
If I remember correctly, Emily, and correct me if I'm wrong, you didn't jump on the international bandwagon in the way others did at the start of the year. Emily, why was that?
Well, I think that there's an idea out there that there's going to be this immaculate economic cycle where, somehow potentially the U.S. goes into a recession, but the rest of the world avoids one. And that's just never been the case. And we continue to believe that we're going to see a global economic recession. You just look at the PMIs on the manufacturing side. Germany's at 42, and meanwhile, you're seeing European equities at all-time highs. To us, the macroeconomic backdrop just simply doesn't match with a cross-asset performance. And also, when you think about owning European equities, it's very cyclical, high beta. They tend to do better early in an economic cycle. And right now, we think we're in a late cycle environment. So we think that you want to wait. We do have some of it in portfolios. We're overweight Europe versus emerging market equities, but we think that the better time for Europe is going to be in the future.
Emily, wonderful to hear from you, as always. Emily Rowland of John Hancock Investment Management on booze, sport, and a bit
she
of markets.
Covered it all there. F1
Does it get
chat?
better than that? Bit of F1 chat too.
Yeah, I had no clue, but
Told us coming into the segment in the commercial break, very excited about Wimbledon.
I don't know. She was